Hello everyone, how are we doing today? Hope everyone's had a great weekend and a relaxing one. With that being said, it's Sunday, so you guys know what time it is. Time to get back to business, get ahead, get ready, prepared for this week, what we're seeing and what we're expecting in this week's price action and trading. So with that being said, we'll get right into introductions and get right down to business. So my name is Dylan Richards. I'm a professional trader. I trade through True Forex funds, and I'm also a financial analyst and technical analyst as well. With that being said, I'll pass it on over to my associate Tommy, who I'm in great appreciation to have him join us in our meeting, as he's a hell of a financial analyst and a great technical analysis as well. So I'll pass it on over to you, Tommy, and we'll get right down into it.
Yeah, thank you very much, Dylan. My name is Oluwa Thomason. I'm a professional trader with True Forex funds also, and I'm looking forward to this beautiful session with us all. Welcome on board, and like Dylan said, you know what time is it? It's time for answers, so let's go.
All right,
So, Dylan, over to you, brother.
Awesome, thank you. Let's get right into it. So, all right, looking at the dollar index on a weekly chart, we've seen prices trade it down into a discount. Just to give a little bit of context of where we're at, price has delivered a discount, more specifically this fair value gap. Price is traded into it after taking out the sell side liquidity, and we immediately rejected it and rallied higher. So looking at previous week's trading, we saw we opened, manipulated lower, and the main expansion of the week was higher into our premium objectives that we were looking for. Although we did come off those highs and we retraced down to the open, it still was a bullish week, and it did reach our objectives that we were looking for that were logical. So with that being said, I'm still seeing bullish order flow on the dollar index. We'll get into more specifics on a daily level of why we are at a very critical point in the market and why we will want to see specific things to confirm what it is we are looking for. So for the dollar index on a weekly chart, I still am favoring an expansion higher into premium, being above this equilibrium of this dealing range. So I will want to see price deliver up into this fair value gap in here in a premium for a medium term outlook. Going into this week, I will want to see price open, expand higher through previous week's high, and dig into this bullish order block and potentially look to start digging into this fair value gap. So with that being said, that's what I'll be seeing and anticipating here going into the dollar index on a weekly, and I'll pass it on over to you, brother. Hello? I believe you're on mute, Tommy. Hello, can you hear me, Tommy?
Yeah, I can hear you, brother. Sorry, I was having a little bit of network issues.
Okay, all good. I can hear you now. So I shared what I was seeing here for the weekly on the dollar index, and I'd love to hear your insights now.
I'm also with you. I see the same thing. We're still very much inside of a discount, and I want to continue to see higher prices on the dollar. And so far, just as when we get down to the daily time frame, we'll see why we are at critical levels. But on the weekly time frame, we have some relatively equal highs just above, and a bullish, no, a bearish order block just above. So I would want to see price trade to that this new week if we are to continue to see bullish price action. And just as I said, we go up to go down and we go down to go up. So basically, I still want to see continuation of price higher inside of a premium from a discount. So I am looking and leaning towards bullish price action this week, unless proven otherwise by um, further price action, basically. So I agree with you 100.
Awesome. Thank you for that. Moving right along. One other thing I did want to touch on here for the weekly chart for the dollar index, I did want to note that we do have a wick here. So what I will want to see when we open up or actually we have opened up Sunday. So what I will want to see in this week is an expansion through this wick. I don't want to see price trade up into the 50% of this wick being the 105.260 level. I don't want to see price trade up into the 105.260 level, start flirting with that level, and then potentially get weak or act as resistance. I will want to see price rip right through that wick, overlap it, and expand higher. Why is that? Because if price does trade into the 50% or consequent encroachment of that wick and begins to get heavy, then that could signal a potential deeper retracement, which I am not favoring. Why is that? Because this is a balanced price range. Buy side's been offered, sell side has been offered, and then now once it leaves that price range, it should not return back to it because it's efficiently offered price through that range. So I will want to see speed and expansion higher through this wick and would not favor a flirting of that consequent encroachment level, as that could signal a potential retracement. So that's what I'll have my eyes on going into this week and what I'll be expecting. Dropping down here into a daily chart now. Same thing as on the weekly. We've taken out this external range liquidity here. We were looking for this fair value gap to be delivered to inside this order block, hits it, and then immediately rallies higher, shifts market structure, and we have been bullish. So now that we kind of have context for where we're at right now, what I do want to take everyone's attention to here is just monitoring the order flow. Order flow is bullish. We're finding support at key discount levels. Here we have a fair value gap. We see the bodies respecting those levels beautifully. Price just trading below these lows. What's it doing? Accumulating those sell stops to continue higher into premium. So we have seen down close candles supporting price, and price continuously reaching higher for premium objectives. So just to recap last week before going into our expectations for this week, price has delivered beautifully through our objectives. There's inefficiency here that we were looking at. Price has traded up into it and has re-delivered this whole price range, as well as attacking this buy-side liquidity above these relative equal highs. So since our objectives were delivered to last week on Wednesday, we then saw a retracement Thursday and Friday, taking out the relative equal lows. So now that we have context for where we're at, what I will be monitoring going into this week is how we trade. As we discussed on the weekly chart, we're at a very critical level here for the dollar index. What I will want to see is price supported at key discount levels. Those discount levels for myself are this bullish order block in here. This bullish order block, we've seen prices traded to it once, twice, left it, came back to it, reclaimed order block, and we are seeing support at that level. So what this appears to me like right now, without any hindsight, is the algorithm is offering the market for smart money to buy inside of this key level, inside of this open. So every time the market's hitting these levels, it appears to me that that's where smart money is looking to accumulate to ride price higher. So what I will want to see going into this week, as long as this bullish order block is not violated and we stay above it, and this bullish breaker in here, we see the bullish breaker, and let me mark out the 50% of that for you all. So the mean threshold of this breaker is the 104.629 level. So let me mark that out here. That's 629. So this black line here is the mean threshold of this bullish breaker, and then note where we closed on Friday. We delivered below the sell side liquidity into the order block, but look at where we closed. So beautiful respect for these key levels. So what I will want to see going into this week is support inside of this bullish breaker and this bullish order block. If we do violate those two levels, then I will just reevaluate and get in line with what the market's showing at that time. So that's what I will want to see moving forward into this week. My upside objectives on this week will be the relative equal highs that we now have formed. So that would be previous week's high. And then I will look for delivery into this small inefficiency above that volume imbalance here in the form of this fair value gap. So my first objective, previous week's high. Fair value gap would be my second objective. And then assuming we continue expanding higher with speed, we do have two buy-side liquidity pools in here. The first one being the 107.195 level, and then the last one being the 107.993 level. So that's what I'll be looking for and anticipating in the dollar. So I will be expecting more risk off to continue as long as the criteria is met that I've outlined for you all. So with that being said, let me pass it on over to you, Tommy.
You're well said, brother. I don't have any other addition. You did really great. I'm good, brother.
Awesome. Thank you. All right, let's get right into the interest rates markets. Okay, I feel you had some good insights to share for the interest rate market, so I'll let you take that away first, and then I'll follow up with what you share, brother.
Okay, I believe let's start from the weekly time frame. Um,
From the weekly, coming right up.
so basically last week was um, let me call it a carnage on its own. Price really we delivered aggressively last week. And let me just give a little bit of the macro side to why we had a very lower and strong bearish candle as opposed to we expecting um, a very strong bullish candle. A bank called Silicon Valley Bank collapsed last week, which simply meant a lot of depositors' money were trapped, and basically it has made people lose confidence in the financial system temporarily, and we might not even know. It might be long term. So because of that, the whole financial markets really collapsed throughout last week, and that was why we had a very slow and bearish week last week. But as forex traders, things like this can be anticipated way before time, and basically we traded to a bearish order block to the far left after taking out buy side liquidity, and basically I'm still very much bullish on the interest rates. But this week we might see some sort of a retracement this new week, from premium to discounts, because just as I said, we go down to go up. So basically this week I would want to see some form of retracement lower first before we move higher. I'm still very much bullish on the weekly time frame, and we might potentially trade down to the volume imbalance around the 3.5 levels before we see higher prices or higher interest rates on the interest rate. I would have said, because there's a volume imbalance to your far left, around the 3.7 levels. So I'll be watching those levels to see price react around those levels. But failure to get a solid reaction around those levels to move higher, I would target the volume imbalance and fair value gap around the 3.5 levels. But my objectives to remain the same. I will be looking for higher prices on the weekly time frame, and on the weekly time frame to see higher interest rates going into next week. But let's also take into consideration that we have the CPI on Tuesday next week, so price might be a little bit skewed. Just as I was discussing with Dylan earlier, prices are a little bit off because of the macro and basically everything that is going on right now. But the what's that word? The analysis and the other flow still remains bullish in my opinion. So I'll be looking for higher prices on the interest rate. And like we said, we're in a premium, so I would want price to come into a discount and to see higher interest rates. So that's what I'm seeing on the weekly. Dylan, in case you want to add anything, I'm good, brother.
Awesome, my man. Great analysis, and we're seeing the same thing. Just to add a couple more things that I was also seeing, we have a bullish breaker in here. I did want to see price supported by that. Since it wasn't, well, I'm going to take my attention down to the next PD array below that. And then as Tommy highlighted, we have a volume imbalance here. and then we also have a fair value gap down here. So this really is the last line in the sand for bulls on the interest rates. So I will want to see how price trades inside of these key levels for a feel of where we are likely to move into this week and into the coming weeks, so that we can have our clear feel for risk on, risk off. One thing I do want to note is that this candle is Friday's price action. This was non-farm payroll, and as my associate Tommy did a great job highlighting, there's a lot going on in the world right now. I'm not going to touch on too much of it. There's a lot of distress in the financial system. As my associate was discussing, depositors in Silicon Valley Investment Bank, they are now waiting outside the stores in droves trying to get their money that they don't have. So there's a lot of confidence that's being lost in the financial system, in the dollar, in our banking system, and we're starting to see these effects manifested that have been there for a long time, that we're now starting to see manifest over time. So that's why we're seeing a lot of erraticness, especially in interest rates, in the bond market, in the dollar, as well as interest rates and index markets. So we are seeing a lot of things going on right now. So it is important to keep all that in mind when we are looking at these candlesticks. So what I'll be monitoring on the technical side going into this week for the 10-year yield, we have dropped down into a discount. So now that we've traded down into a discount level, we have a bullish order block in here. And 1 second, my phone is blowing up. Okay, so we see a bullish order block in here in a discount, and we also have a fair value gap. So now that price has traded down into a discount of the new dealing range we've made, I will want to see how price trades inside of these key discount levels to get a feel for order flow and what program we're in. So what would tell me that we're in the beginning of a sell program and going lower is if we show no respect for these discount levels and we keep melting through it, then we'll just have to switch gears and trade what the market's giving us. However, I am still favoring higher prices with interest rates as well as higher dollar. So risk off for me moving forward. For my targets for the interest rates, we got a beautiful fill of this fair value gap that we were looking for these past few weeks. Delivered that beautifully and then traded off these highs after reaching that premium level. So what I will want to see is how we react in this discount to then get a feel for the order flow and interest rates to then give us a X-ray view of the markets to determine risk on, risk off. So with that being said, if you don't have anything to share on the 10-year yield, let's go right into the index markets then.
Yeah, definitely 100.
Awesome. All right, so pulling up the weekly. Well, actually, before the weekly, I have something to share on the monthly chart real quick. So looking at the monthly chart, we were kind of hinting to you all that we were likely to see a bearish month, power of 3 form. So if we look here, this is the new monthly open. We saw the opening price here at the 3968.5 level. Price trades above it, manipulating higher. Who's accumulating shorts above the opening price? Smart money. And then now they're going to ride out the expansion lower. So dropping down here into a weekly chart now with that monthly power of 3 in mind. This is why I was still able to confidently be a bear for the index markets this week, even after seeing a bullish candle last week. A lot of people see bullish candles, they'll see a few up close candles and then get all excited thinking, oh, now the market's turning and going higher. But that's why it's important to look at market in the context of time, then price. Not just time of day, time of week, time of month, time of year. So that's how we were able to use these insights and procure them to give a precise prognostication that delivers consistently. So let's look back before looking forward. We see here I took everyone's attention to that small fair value gap in here, and then this volume imbalance above market price on the weekly. So what I shared was there's 2 discount arrays or 2 premium arrays above market price that I do not want to see violated if we are to continue lower. So we saw a typical delivery for this previous week, textbook, open, manipulation, distribution. and then it delivered to the levels I took your all attention to last week, which is this volume imbalance on the weekly chart. We have now laid a body over this inefficient price delivery, and it delivered just as we were expecting. So with that being said, going into next week, I will favor expansion lower into these relative equal lows in here. One thing I did want to take everyone's attention to that we did discuss maybe 2 weeks, maybe 3 weeks ago, is the market efficiency paradigm and the narrative. One thing we try to provide is the why as to price should be doing what it's doing, not just I'm expecting price to go lower and this is where I expect it to go. I gave you all the narrative and outlined why these movements should be happening. I took everyone's attention to the dealing range that we're in here. Price delivered to premium above relative equal highs. Price formed a swing high in this premium above these relative equal highs. So if smart money was accumulating short positions inside of this premium, where would they look to offset distribute those positions? They would look to offset distribute them below these lows in here. So if they're shorting in a premium, they're going to want to look to buy back and cover those shorts in a discount. So smart money sold up here to the willing buyers, and now they're going to buy back in a discount to the willing sellers down here. So that's just a little bit of narrative on top of the bias we were giving and why it should happen the way it did. With that being said, though, that's what I'm seeing here on a weekly daily chart, and I'll pass it on over to you, Tommy.
Well said, brother. How well said. I'm actually saying the same thing too, so I agree with you. So not to waste much of our time, I would suggest maybe we'll go down to the daily time frame and move on. You did a great job, brother.
I appreciate that. Thank you. Awesome. So before we actually get into the ES and the Nasdaq analysis, someone was asking the difference between a mitigation block and a breaker. I covered this in detail. I actually did I showed a model and then pulled up a couple examples in 3 videos ago, I believe, but I'll just go over it briefly here. So let's look at the Nasdaq. So this is an example of a mitigation block. The mitigation block would be the last down close candle before the failure swing. So here we would have a mitigation block. This would be the mitigation block. Why this one? Because it's the lowest down close candle before a failure swing and then a market structure shift lower. What would make this a breaker? If price took out these highs and rated stops. So that's the big difference between a breaker and mitigation block. A breaker runs out stops, whereas a mitigation block is more associated with a failure swing. So I hope that covers that for you. Yeah, I hope that covers that for you, Walter. And if you want me to expand a little more on that, I would be happy to. And then I can also refer you to the previous video where I covered that a little more in depth. So here, looking at the daily chart, beautiful bearish delivery in line with our expectations. Just looking at price, looking back at it to get a feel for why price did what it did. We have a fair value gap SIBI here. So we opened up the week on this Monday here. So last week I took everyone's attention to this displacement leg we formed, and then we closed out the week right here with a bullish blue candle. So what I was sharing with you all, I was expecting this move higher to be just a retracement into a premium to offer shorts to continue lower, and that's exactly what happened. So measuring the dealing range from this high to this low, we want to measure the displacement leg as I shared with you all last week. Price traded up, where more specifically above equilibrium into a premium. Who's getting short inside of a premium? Smart money, just like we were. We're looking at this move higher as a premium that we want to sell into. So we get short in the premium and then we ride it down. Where do we distribute those short positions? To the willing sellers below these lows. So just textbook delivery last week. Note the bodies, how they respect this fair value gap beautifully. So we're seeing bearish order flow. Price is respecting premium levels. I also took everyone's attention to this breaker in here. And let me make that blue. And then we respected these nested PD arrays in here in the form of a fair value gap, breaker, and volume imbalance in here. And price was not able to trade above those key levels that we were all monitoring going into this week. and then we had a downside delivery after the Judas swing expansion higher on Monday. One other thing I did want to take everyone's attention to is a concept we discussed a few weeks ago, which is using key levels to determine and measure the strength of order flow. What does that mean? So looking here at this fair value gap, just real quickly, looking at the 50%, the consequent encroachment, that would be the 40.22.5 level. So taking all the lipstick off the chart now, we see price was unable to trade up to the 40.22.5 level. So what does it indicate if price is unable to reach a consequent encroachment of a wick or a gap? It indicates price is extremely weak. And then we saw that into Thursday, Friday, and this is how I was able to anticipate a nice lower expansion as the market was consistently giving me feedback that we are bearish and order flow is bearish, and to expect discount objectives to be delivered too. And then after taking out these relative equal low sell side liquidity, my last objective on the week was the mean threshold of this order block, which was right here, and that delivered handsomely. So with that being said, going into this week now on indexes, I will expect continued lowered expansion. We have multiple PD arrays nested above market price right now. We have a bearish breaker denoted by this blue box in here. It's that last down close candle before the upsweep. So now, why is this a breaker and not a mitigation block? Because there's a swing high and there's a fair value gap. So it's delivering higher Y to accumulate liquidity and rebalance this inefficient price delivery. So this is what makes this a breaker. So we have a breaker, we have a fair value gap in here, and I'll go ahead and make this one to red. So we got this fair value gap here in red, and then we have a volume imbalance here that my associate brought my attention to, and we'll do that by the two blue lines. So as you guys can see here, we have multiple PD arrays in a premium, and I would not want to see price violate those levels if we are to continue lower. So that's what I'll be expecting on the week. My downside objectives, assuming all the criteria is met, order flow remains bearish, risk off continues. My downside objectives will be these relative equal lows in here at the 3788.5 level. And then assuming we get continued further acceleration, we have a swing low here at the 3735 level. So those will be my downside objectives on the week and what I will be expecting. And as I gave you guys about 2-3 weeks ago, I did share my longer term to medium term outlook. And as I said, I am expecting us to make new lows here on the S&P. And that's assuming risk off continues, dollar remains bullish, interest rates remain bullish, and we continue bullish order flow on the index markets. So with that being said, I'll pass it on over to you, Tommy, and you can share any insights that you have.
Thank you very much, my brother, and really well said. Not too much of further insight, brother. I'm actually saying the same thing, and just as we discussed earlier, the objective still remains sell-side liquidity. But since we are entering a technical week, we might see some sort of retracement higher into the fair value gap and volume imbalance inside of the premium. And it's also possible that we might not even get to the volume imbalance. To the fair value gap and volume imbalance inside of the premium. We might just reject off a former volume imbalance to your far left and balance price range, just as you highlighted earlier, before we see lower prices. But the overall template and the overall bias for this new week is looking for sales, basically. Until proven otherwise by further price action, I would personally be looking for sales on this new week. But the levels to pay attention to is the volume imbalance highlighted in red, to see if we can get the reaction of it to go lower. But if we don't, then we should know that we are moving higher and we are gunning for the fair value gap and breaker with a volume imbalance also to see further price action and delivery lower. So I would personally expect a bearish doji to close the week. That means we go up first, then we swing it lower, just as we did last week. But like Dylan said, my focus and my trading will be centered around looking for shots throughout the new week, unless proven otherwise by price action. So that's it by me.
Very well said, Tommy. I'll be expecting the same thing, and also thank you for bringing our attention to this volume imbalance. And one thing I also did want to discuss is that volume imbalance is also lined up with this balanced price range that Tommy brought up that we were discussing here before our meeting. So I'm going to highlight this section in price action and discuss a little more why I am expecting this to be a key level in price. So we'll make that purple. So this is a balanced price range. Why is this a balanced price range? Because we see the market opened or closed here, offered sell side, buy side. When this candle opened, it offered buy side, sell side, and then we've left this price range. So looking at this price range, we've had efficient delivery. Buy side's been offered, sell side's been offered, and it's left it. So this purple region is now a balanced price range, or the analogy ICT likes to use when teaching is the paint roller analogy, where when you're applying paint on the wall, you're not going to keep repainting the same portion of the wall multiple times because you have limited paint, and in the algorithm's case, it has limited time to get to objectives. So you're not going to waste time painting the same section of the wall, so you're going to paint it, deliver it efficiently, and then move on to the next part of the wall. Well, that's the same way to conceptualize what the algorithm is doing. It's offering sell side, buy side, both sides of the marketplace has been offered fairly, and then it leaves it. So now that should be a balanced price range that should be respected, assuming order flow is bearish. So I will be watching this purple section as a key level for price to want to get heavy in, assuming we do not even trade up to these premium arrays that I'm taking our attention to for a potential Judas swing manipulation. So with that being said, that's what we're seeing here for the week. Lower prices on indexes, on foreign currency, digital assets, and risk off. Higher dollar, higher interest rates. So that's what we'll be expecting into this coming week. So with that being said, we'll take a few questions and then we'll let everybody go. Okay, so I got a question from Soren C, and let me read that now. To achieve the trading plan, we need execution process to be optimal. What type of transaction execution do you use, and do I think would be appropriate to use? So the three examples were execution at a price level. So this order is entered before the transaction, so a limit order, a market order, or do we wait for confirmation in a lower time frame to then get an entry when the signal appears? So really, that's a personal question that will really be determined on your trading strategy, what time frames you're using, what strategy you use. So since I didn't get any specifics on what trading strategy you use or time frames, I'll just discuss this in a broad discussion. What you can do, personally, I use both. I use market orders and limit orders just depending on the situation. I personally like entering market orders, but I only enter going short in an up close candle, and I only buy in a down close candle. So I need to see a candle below its opening price on a 1 minute, 5 minute for me to buy it. Or if I'm looking to sell it, I want to see it above its opening price. So I only buy down close candles and sell up close candles. That ensures I'm getting a good spread, I'm getting a good fill, and I'm not chasing price. So I use both order execution methods. I use limit orders and market orders depending on the situation. And then I also use the third option that you've discussed, which is, okay, price trades down to a key point of interest, that being an order block, a breaker, fair value gap. And then I'll drop into a, let's say the fair value gap's on a 15-minute, and I want to see a bullish reaction off it. Okay, price trades into that fair value gap, and then I'll want to see, or actually I can just show an example real quick, this week's trading. Awesome. Okay, so we'll look at this price right here. So beautiful delivery this week. We're in a expansion profile now. We're not in the consolidation like we were earlier in the week. So your power of three, your more concepts and methods used in expansion profiles will be much more applicable now. So to not dress this chart up with all the lipstick, here we see the opening price at midnight. So we see the opening, accumulation, manipulation, distribution. So how could you have gotten short above the opening price, above buy side liquidity to ride out this short? So a key point of interest on an hourly chart would be So this is what I was looking at into this week. So the consequent encroachment of this wick is the 40.18.5 level. So we saw a reaction there, and this also lines up with the old new week opening gap, but I'll let you you guys look at that for your homework. So I was already anticipating lower prices because I was expecting this market maker sell model here to fulfill and attack these lows in here. So I was anticipating short prices here in this manipulation. So how did I use lower time frame confirmation to confirm what I was looking for? So I was already expecting price to get weak inside that wick level that I showed on the hourly, and then price manipulated above buy side liquidity and a premium, relative equal highs, buy side liquidity. So I want to get short to these willing buyers. So using the market replay. Now dropping down into a 5-minute here. So now our point of interest is defined. We know we have our drawn liquidity, where the market's likely to go to, which is number 1. I've identified my higher time frame bias from the hourly to the 15-minute down to the 5-minute. So now I'll look for my entries. So I already know this is the key point of interest from what I shared on the hourly and 15-minute. And then now we just wait for our entries to form. So you could have gotten short here off this fair value gap after we displace lower, get short the fair value gap. If that's not your PD array, here's a mitigation block. Why is this a mitigation block? Because it doesn't purge buy side liquidity. It's a failure swing. So this mitigation block, you could get short in there. Or we have an order block in here after. So we see change in the state of delivery. Price is now bearish. We see a order block happen. Price displaces lower through the opening, making that an order block. Price trades up into it, hits the opening beautifully. So there was 3 PD arrays in this price move that you could have used to be a participant. So you could enter these on limit or on market. Personally, I like doing market. So as soon as I see we trade 1 tick above this fair value gap, I'll hit a short at market. Or if I see we're trading into, I personally don't trade mitigation blocks. I personally favor breakers, fair value gaps, and order blocks. But let's say I wanted to get short this order block. Well, I wouldn't just put a limit at the opening price. I personally like to see confirmation in a lower time frame, so I would like drop into a 1-minute and then want to see a shift in market structure with displacement, fair value gap, and then that's where I would get short. So there's multiple different ways you could use the execution techniques using market, limit. You can get in on a stop order. That's not as recommended because then slippage will typically hurt you as the market's moving in the direction you're trying to trade in. So I would personally stay away from stop orders, but if that's what you're comfortable doing, then that's totally fine. So I hope that covered your question on the different execution styles and how they can be used. Hey, Ali, so I'm seeing you're asking about rejection blocks, new week opening gaps, and macros. That's a pretty heavy question. So since that was asked in the middle of the meeting, I will refer back and circle back to that question in our following meeting because I would rather have some examples so that we can look at live examples that happened in the previous week or in this week that's coming. So if you could ask that question again ahead of next week, ahead of the meeting, I'll be sure to get something prepared for you and do a little teaching on those. I would be more than happy to cover that. Christian and David, Euro USD, of course. I didn't forget about you guys. Euro. So the Euro's been interesting along with the dollar. Okay. All right, let me hop up to a weekly chart. Okay, not much to see on weekly. All right, so dropping down into a Euro daily chart. We have been getting lower delivery on Euro, but we have seen Thursday into Friday of last week, we did see price trade higher. What I did like to see is the fact that price is respecting the consequent encroachment. We see the bodies stop at consequent encroachment, and then we see the wicks trade up into it. They fail, trades up into it, fails. This Friday, we tried to stab up into it one more time, and then we closed below that fair value gap, which was indicative that price is still in a sell program to meet. This is the Sunday opening, and I figured the Sunday open would be very hectic with everything going on, a lot of distress right now with investors and just everyday people that have their money in the bank that aren't able to access it. So I would definitely expect a very erratic week of price action, also given that we have CPI. So when I was looking at Euro over the weekend, order flow is still looking bearish to me. We're respecting this key fair value gap, and I will remain bearish on Euro as long as we remain below this fair value gap. What changes that? If we take out this swing high here, I would rather not see that because this is an intermediate term high and a breaker in here. So I don't think price should go above this level if we are to remain bearish, but I will be monitoring how we trade overnight in the London, the European session, and going into New York session tomorrow. I will be waiting to place trades and risk my capital after the CPI on Tuesday. I am thinking we had a huge range Friday, a lot of action on price on Friday, a lot of uncertainty, so I will want to wait for CPI to hit the market before I'm comfortable risking my capital in these market conditions. So looking at Euro, as long as we remain below the fair value gap, I will remain bearish. We now have relative equal lows here. The mean threshold of this bullish order block was pierced. And as I shared with you all, I am anticipating lower delivery into a discount. As long as the dollar remains bullish, I will stay bearish Euro. And we are seeing that confirmed with everything I was sharing on the dollar index. So for our Euro traders out there, in summary, as long as we stay below the fair value gap, price should remain bearish. We've penetrated the mean threshold, and I wouldn't want to see this high violated. That would be a cause for concern, and we may just need to switch gears into whatever the market is showing its hand at that time. So with that being said, just monitor the dollar interest rates, and that'll definitely give a clear indication on what Euro and British pound is likely to do. And then, Walter, could we show an example of a breaker used in lower time frame entry? I don't have any off the top of my head for this week. If you still have that question, come next Sunday, ask it before the meeting, and I will be sure to have some examples ready to go for you. For lower time frame for entries. So, I mean, here's one on a 15-minute, just off the top of my head. This is the only one I can remember from this week. So the lowest down close candle before the up move higher. So this would be the breaker right here. Price trades down, comes back into it with this candle. That's a short. So that's the only breaker I can recall off the top of my head from this week. But if you still have that same question, as I said, just be sure to ask us ahead of the meeting on Sunday for the following week, and then I'll be sure to get a few examples ready to go for you. And I can even make it into a teaching segment if you would find value in that. So with that being said, let me double check the Telegram real quick, make sure we don't have any more questions, and then keep moving right along. Okay, Shamas, you want me to look at the Nasdaq? Yes, sir, coming right up. So same thing as indexes, the Nasdaq is extremely weak. I am expecting it to be the relative strength leader. Kudos to my associate Tommy. We were discussing here ahead of this meeting, and we are anticipating the Nasdaq to be the relative weakness leader this week, given that it still has much more ground to cover compared to the ES and the Dow. So beautiful delivery lower on the Nasdaq, price respecting key levels. We've traded below this sell-side liquidity from the previous week. We rejected this mitigation block, volume imbalance beautifully. I think that printed our high a week actually, and then we've delivered lower. So long-term Nasdaq, I'm expecting these relative equal lows to be delivered too, as long as the order flow remains bullish. For the Nasdaq, same thing in ES. We have a bearish breaker in here, being this last down close candle. So I will want to see, let me change that to blue. So I will want to see price respect this bearish breaker. We have, okay, yep. So we have bearish order flow on the Nasdaq, bearish breaker in here. Nested inside, we have a volume imbalance and a balanced price range. Balanced price range because remember, as I've covered, sell side, buy side, sell side, and then it's left as price range. So this range has been efficiently offered. So we have a balanced price range, breaker, and volume imbalance. I wouldn't want to see price trade through these key levels if we are to remain lower. My downside objectives on the Nasdaq would be the swing low in here, and then I will expect a fill of this inefficient price delivery in here, being the 11,604.50 level, and then the full fill of this inefficiency would be the 11,487 level. So that's what I'll be anticipating here on the Nasdaq going into this week, and what levels would violate, what levels violated would disqualify what it is I'm seeing. So with that being said, I think this meeting will be a wrap. Thank you all for sharing your time with us and joining us in our Sunday meeting. As always, your feedback is greatly appreciated. If you're finding value, suggestions, things we could improve upon, that's all greatly appreciated. And with that being said, please share what we do here with your other associates, with your other friends, and let them know what value it is we're providing to you all here on a weekly basis. With that being said, thank you again, and I look forward to speaking with you all through this week, and I will provide updates in the Telegram per usual. So with that being said, everyone, have a great week, be safe, and take care. I'll pass it on over to my associate, Tommy.
It's been a great session with everyone here. I wish us a great trading week. We would communicate and we'll be in touch better on the Telegram channel. And just as Dylan has said, spread the news around, tell a friend to tell a friend. Looking forward to interacting with each and every one. Thanks for coming. I really appreciate it. And do have a lovely week ahead. Bye-bye.
Thank you, brother.